I think, unlike the prior peaks of 2000, I don't expect any significant pullback from the current $3,000 price. In fact, we're probably going to go straight up to 4,000 and beyond. I think we're going to see $50 silver probably this year. And I think when it breaks $50, it's going to be like gold breaking 2000. It's going to go up really and not look back. So if you missed the boat on gold, although it's not really missed because I think it's going a lot higher, but if you miss buying $2,000 gold, you don't want to miss buying sub $34 silver or even sub 50 because you won't be able to get those prices for long.
Gold prices climbed 1% on Tuesday, reaching a fresh record high above $3,000 per ounce. Escalating Middle East tensions and uncertainty surrounding U.S. President Donald Trump's tariff plans fueled demand for the safe haven asset. The precious metal, which had a remarkable performance last year, has continued its strong momentum in 2024, gaining over 15% year-to-date and setting record highs 14 times. Analysts suggest that this rally is different from previous peaks. PeterSchiff of Euro-Pacific Asset Management notes that, unlike past gold price surges that faced corrections, this rally appears to be in a new phase of expansion, with no significant pullback expected. He predicts that gold could soon reach $4,000 per ounce and continue its upward trajectory. Supporting this bullish outlook, ANZ raised its short-term gold price forecast to $3,100 per ounce over the next 3 months and $3,200 per ounce over the next 6 months. The bank highlighted strong geopolitical and trade tensions, easing monetary policy, and continued central bank buying as key drivers of gold's sustained strength. Meanwhile, silver is also showing signs of a potential breakout. Historically, silver peaked at $50 per ounce in both 1980 and 2011, but it failed to reach that level in 2020. Schiff suggests that silver could follow gold's pattern of rapid appreciation this time once it surpasses the $50 mark, with little chance of retracement. The silver market saw a strong rally during early trading hours on Tuesday, continuing a trend of increased investor interest in precious metals. On Monday, silver had formed a massive hammer pattern, indicating a continuation of recovery near the crucial $33.33 level. Since the beginning of the year, silver prices have risen by 17.95%, reflecting growing momentum in the market as investors seek alternatives amid global uncertainties. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The price of gold kept going up until today. It's now above $3,000 an ounce. But again, today, no real media coverage. It's barely been mentioned. Nobody is talking about it. Not like they talked about it at 2000 in 2020 or when it almost got to 2000 in 2011. It wasn't even an afterthought or a second thought. Nobody is paying attention. The public has been selling gold the entire rise from 2000 to 3000. So to me, this looks very different than 2011 and 2020. We've built an enormous base for gold at 2000. This is a brand new leg of a huge bull market where gold started below 300. We've now gone up 10x in the price of gold so far this century. Gold is beating the S&P 500, and I think it's going to accelerate from here and even take a bigger lead on the stock market as the stock market goes down, but it's doing it in complete obscurity. There is no gold rush going on. Investors haven't woken up. In fact, all of the buying really is being driven by the central bankers. Investors haven't even woken up to what central banks are doing, but the central bankers are the insiders of the fiat monetary system. So when you see in the stock market, if the insiders, the people that work at the company, are buying company stock, that's a good sign. If they're selling company stock, then maybe they know something bad and you should follow their lead. Well, the insiders in the fiat monetary system have been dumping their dollars to buy gold. They obviously know something. I think, unlike the prior peaks of 2000, I don't expect any significant pullback from the current $3,000 price. In fact, we're probably going to go straight up to 4,000 and beyond. And in fact, When gold hit 2000 in 2020, in April of 2020, the dollar index was at 93. Today, the dollar index is at 103. So the dollar has increased 10%, even as gold prices have risen 50% in dollars. And what that means is that the price of gold in other currencies, like the euro, like the pound, like the Australian or Canadian dollar, or the Japanese yen, or a lot of other currencies, gold has done even better in terms of those currencies than it has in terms of the dollar. But my expectation is that the dollar has topped and is headed substantially lower. I expect the dollar index to get down to 93 again before the end of the year. In fact, I think it'll go lower. But when the dollar index hits 93 next time, I expect gold to be pretty close to $3,500 an ounce, not $3,000. So this is the time to buy. But actually, instead of buying gold, which you could buy, and I still recommend because it's going up, you could buy silver, because silver is still below $34 an ounce. The reason that silver has not gone along for the ride with gold is because central banks aren't buying silver. That's what retail investors buy. Silver has been described as the poor man's gold. Well, men and women haven't been buying gold or silver unless they're central bankers. So silver is the sleeper precious metal that's about to wake up. Silver doubled top at 50 in 2011. It didn't even get back to 50 in 2020. It got to about 35. We're almost there now, but still not quite. I mean, gold has gone up by 50% and the price of silver has gone down. That's really unprecedented. The other time silver hit $50 was 1980, when the Hunt brothers tried to corner the market. I think we're going to see $50 silver probably this year. And I think when it breaks $50, it's going to be like gold breaking 2000. It's going to go up really and not look back. So if you missed the boat on gold, although it's not really missed because I think it's going a lot higher, but if you miss buying $2,000 gold, you don't want to miss buying sub $34 silver or even sub 50, because you won't be able to get those prices for long.
Despite the strong bullish outlook for gold, a growing disparity has emerged between major producers and junior miners. Large gold companies have seen their stock prices more than double year over year. Yet, smaller exploration firms, particularly those listed on Canada's TSX Venture Exchange, have struggled to gain investor attention. This disconnect largely stems from a lack of generalist investor capital. While inflows into physical gold and ETFs continue to rise, mainstream funds continue to overlook mining stocks. Despite holding significant resource potential, junior explorers are trading far below their book values, reflecting a broader market reluctance to allocate capital to smaller mining ventures. Mining stocks, however, offer the potential for even greater returns. Many companies mine gold and silver, benefiting from the ongoing rally in precious metals. PeterSchiff notes that central bank gold purchases have increased prices, but institutional and retail investors have yet to enter the market. Once they do, mining stocks, incredibly undervalued juniors, could experience a surge in demand, further accelerating their upside potential. Let's get back to the interview.
I remember how difficult it was to convince people a year ago to buy $2,000 gold. And so many people were waiting for a pullback. Let me just get a pullback. Let me just get 1750, 1800. That pullback never came. And so the people who are waiting for a pullback are still waiting. And now the price of gold is 50% higher. And I know that a lot of people are going to feel the same way about $3,000 gold. Let me wait for a pullback. You'll be waiting, and the next thing you know, it'll be $4,000 gold. I don't think there's going to be any significant pullbacks worth waiting for. That doesn't mean there won't be any, but they're not going to be big enough to make it worth your time or the aggravation of hoping to catch it. I think you just move in now, but if you want to buy something that's not on the highs, then buy silver, right? So if you can't bring yourself to buying $3,000 gold, even though in the scheme of things it's still cheap, then load up on $34 silver. In fact, silver closed today at $33.92. So you still have a chance to buy silver below its all-time high. Now, I don't think that chance is going to be there much longer, so take advantage of it while you can And again, if you're looking for the home run, if you're looking for the 10 bagger or more, then you really got to take a look at the miners. And not only do they mine gold, but they mine silver. So here's your chance, I think, before the rest of the world really wakes up. Right now, it's been the central bankers. They haven't had to compete with investors. They haven't been competing with the hedge funds and the endowments and the pension funds and the retail investors. And they've still driven the price up. But the central banks still have a lot more gold to buy. They've only just begun, because this is a major divestment of US dollars that is going to accelerate and gain traction. But when the investors start competing with the bankers, then I think you're going to start to see the price moving up much, much faster. So before there's a real gold rush going on, before you're competing with a stampede of other buyers, buy now while you can still get great prices. The gold stocks are lower today than they were when gold closed at 2,000 in April of 2020. So again, you've had a 50% rise in the price of gold, yet gold stocks that mine that gold and have huge reserves of that gold have actually gone down. You know, when you buy gold from Schiff Gold, you're buying above ground gold. It's already been mined and refined, right, and turned into a coin or a bar, and we ship it to your house. But when you buy stock in a gold mining company, you're still buying gold. You're just buying gold that's still in the ground. You're buying the reserves of the company, because you become part owner of a gold company when you buy stock in the company. And the assets of the company are the gold reserves. Now, the business is to mine those reserves and sell them, right, and then earn cash that it can distribute to the stockholders.
As gold and silver continue their upward trajectory, the divergence between physical metal prices and mining stocks presents an intriguing opportunity for investors. With central bank purchases driving demand and economic uncertainty fueling safe haven investments, the potential for further gains in metals and mining equities remains strong. As market conditions evolve, investor sentiment and capital flows will be crucial in shaping the next phase of the precious metals rally. Will the undervalued junior mining sector catch up to physical gold and silver momentum? Or will broader market trends continue favoring established producers? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.